you looking to up your real estate investing game? Well, you're in the right place. Welcome to the Sub 2 Deals Show with your host, Sub 2 expert William Tingle.
Hey, Sub-Tours, this is William Tingle of Sub2Deals.com. I'd like to thank you for listening today on the Sub 2 Deals Show. We have Mr. Bill Walston with us today. Bill is an accomplished investor, and I'm sure a lot of you have already heard of him on the Facebook forums and just around. He's been investing for over 30 years. Got his start as an accountant and CPA, and just noticed how many of his real estate clients were making tons of money and said, hey, I'm missing out, so I want to get in on that. So he did. And he is an expert on many topics, but today we're talking about taxes and entity structure for real estate investors. So I'd like to welcome Bill to the Sub 2 Deal Show.
Hey, William, how you doing, buddy? Thanks for having me on.
Glad to have you. I mean, you're a wealth of information, and I know our listeners can really benefit from it. Having your background, you are just the person to have on here for talking about taxes and entities. So you want to tell us a little bit about your background?
Well, sure. As you said, I got my start, have a degree in accounting and finance, a graduate degree in tax law, so I started my own practice, right after school. And as you said, I moved pretty quickly into real estate investing. Most of my clients kind of ended up being real estate folks, either agents or investors. And the word kind of got around that I was pretty good at structuring deals and, working out the tax strategies for that. But like you said, it wasn't long before I saw that the profit was on the other side of the desk. And I said, okay, I might need to take a look at that. Right. My mama didn't raise no fool. So I switched over and started doing real estate investing, sold out my partnership and thought I was through with taxes. Right. Didn't have to worry about that anymore. Unfortunately, that was not the case. What was it? The Godfather who said, just when I'm out, they pull me back in again. Right.
That's right.
So I had clients who really said, hey, man, I still need my tax stuff. Right. So I was able to kind of put the two together from an investing standpoint and, still working with private clients and stuff like that, not on tax preparation, but on the tax strategy part and entity structure part. And as you can tell, it's still one of my passions. I get excited. So I will try to slow down my rate of speech. My granny said I approach every topic with an open mouth and go full force. So here we are.
Okay, great. Listen, I know I talk to tons of investors, and for me and for lots of them, taxes and entity structure is just not something we want to spend a lot of time on. I mean, it puts me to sleep. I remember talking to you. I remember talking to you just a couple of weeks ago. I messaged you on Facebook, and you said, hey, I'm right in the middle of a webinar. And I said, well, what's it about? And you said, oh, it's about taxes. And I said, oh, my God, that puts me to sleep. And you said, man, I love this stuff. And I thought,
do.
Oh, my gosh. But so with most investors that I run into, we just want to know what we have to know to get things done.
Right.
But it's an important part of your business.
It is. And the key is what you just said. It is a business. Okay. And what I see a lot of investors doing is they do not treat their investing as a business. And that's what gets them in trouble. Yeah. Right. You're a business owner. And as a business owner, you've got to focus on what keeps your business running, right? And, your job, frankly, as far as I see it, is to find deals, make offers, find funding, right?
Right.
That's it. That's really what your main focus should be. And a lot of people kind of get distracted on that and try to learn all these way out, sexy strategies and stuff like that. Man, you got to find deals and you got to raise capital. That's what you need to be doing as an investor who is running an investing business.
Right. But there has to be some thought into initially how to set things up, because if you don't think about those things, like I said, and you don't have to have everything perfect, every T crossed and every I dotted, But if you don't give any thought to it and you go out and you do a lot of business, at the end of the year, you can get a nasty surprise.
You sure can. You absolutely can. And that's what I mean by looking at it as a business and treating it as a business. Right? Because as a business owner, you do those things. That's part of doing the deals and finding the deals, is protecting them and knowing how to structure them and, all those types of things.
Right. Well, from the standpoint of looking at it as a business and treating it as such, if you're a new investor and you're getting started, can you just get started without forming an entity, or is that something you have to make a choice on immediately before you buy your first house?
No, sure you can. In fact, I tell people not to wait to get started, right? Don't wait to get started. Don't think that you have to have an entity in place. And like you said, you need to be giving it some thought, right? But you don't have to have it set up yet. To begin with. And it's funny that you mentioned that particular question, because I see it all the time. That was one of the main questions that was asked on a forum the other day. Do I need an LLC before I start doing deals? No, you do not need an LLC before you start doing deals. That can be formed afterwards. And it's funny. I remember this one time, there was one gal who wanted to sign up for some of my coaching, right? So we were talking, told her what she needed to start doing and all that kind of stuff. And a few weeks later, 6 weeks, actually, she comes back to me again. I said, okay, well, how are things going? And she's, have you looked for any deals? Have you made any offers? Well, no. And I said, okay, what's the problem? What's getting started? She said, I can't decide what to name my LLC.
And that's exactly what I'm talking about. So many investors use the lack of forming an entity or opening a bank account or
It's an
whatever
excuse.
as an excuse to not talk to a seller and buy a house.
Yep, it's an excuse. Absolutely an excuse. And sometimes they fool themselves thinking, oh, well, I'm opening up a bank account today. Oh, I'm looking for bandit signs today. Oh, I'm going to look at such and such today, right? And they think they're busy. Busy does not mean productive.
Right.
Okay, busy does not mean productive. And that's a situation that a lot of folks find themselves in. They think they're running a business by running around and doing all this type of stuff. And so that's why I said one of the jobs is finding the deals, right? Yes, this is a consideration, but it's not the main consideration, not at the very beginning. So I am a firm believer in going ahead and getting out there and start making offers, right? And like you alluded to earlier, if you've already started and you've got 5 deals under your belt and stuff like that, heck yeah, you probably need to go ahead and get your LLC formed. Okay.
Right.
But you don't have to have one in order to do your first deal.
Well, I know that's what I tell people. Look, get out there and get some deals. You may find, I don't know how you could do it because I loved it, but you may find real estate investing's not for you.
Absolutely right.
And you may buy a house, 2 houses, 3 houses. And I mean, like me, I bought 4 houses before I ever formed an entity because I was in a hurry to get out there and make some stuff happen.
Absolutely right. And it's not for everybody. And if anybody tells you, says, oh yeah, real estate is the best situation for everybody and his brother, right? That's just not so.
Yeah.
There are some people who real estate is just not a good fit.
Okay, so let's say I've gone out, I've taken action, I've bought 2 or 3 houses. It's time for me to form an entity. And I've looked at this and looked at that as far as tax wise and how to get the most deductions and those things. But really, in your opinion, for the average investor going out there, and getting started, buying some houses, what is the best entity structure for a new investor who maybe specializes in buying subject to and selling with owner financing? And I ask that question because that's what most of my students lean toward.
Okay. I think the best structure for any investor is an LLC, limited liability company. Okay. And then it's dependent upon what type of real estate investing you do, what tax election that LLC needs to have, if that makes sense. Because an LLC is really the best of all worlds. We talk about sole proprietorships. We talk about partnerships. We talk about S-corporations. We talk about corporations. Well, believe it or not, an LLC can be any one of those, right? It's a disregarded entity that can be set up if it's a single member LLC and you default to the regular status. It's going to be treated like a sole proprietorship. Okay. If it's an LLC that is a multi-member and you go default status, it's going to be treated for tax purposes as a partnership. Okay. That said, it can also have a S election, which is a S corporation tax status, or it can have a C corporation tax status. So it gives you the best of all worlds. It gives you liability protection, and it also gives you the advantages of any of the other taxable entities as far as tax status is concerned. You just have to, with the consult of your tax pro, decide which one works best for you.
So you recommend just LLC?
An LLC, and then dependent on what you're doing, then you could do a tax election that would fit. If you're a flipper, okay, and I know that's not sub 2, but if you are a flipper, a lot of people don't realize that if you're flipping a house, even if you take title to it and you turn right around and rehab it and sell it, okay, you're probably going to be, for all tax purposes, what we call a real estate dealer. Okay, and those are not investment properties.
Right.
You might consider yourself an investor, but you're not really an investor, and all of that income is subject to self-employment tax because it's earned income. It's not passive income. And in taxes we talk about passive income and active income. Passive income, is like rentals, properties, stuff like that, getting rents. Okay, that's not flipping income, and that stuff is subject to self-employment tax. So the best advantage to that, as far as I'm concerned, is an LLC with an S election, S corporate election, which passes through those earnings to your personal tax return, but it saves you that 15.3% of self-employment tax that sole proprietors would have to pay.
And you'll just do all your flipping properties in that particular entity.
In that particular entity, right? And you only have to have the one. You can run every single one of your flipping properties through that entity.
Right.
Now, if you're doing sub 2, that's a little bit different. Okay, a lot of that is going to be considered passive income, and it is an investment. Even if you sell the house. Now, you have to be careful when you're doing those, because if you do enough sub 2 deals where you're taking it sub 2 and you turn right around and sell it, you might still run into the situation where you're classified as a dealer, believe it or not. Okay, so some of that money could be self-employed, but most people who buy a property and then sell it with owner financing, most of them know enough about the taxes to get structured as an investor, right? And they're just holding notes, and that's passive income. And that could be an LLC that's taxed as either a sole proprietorship or a partnership, depending on how it's set up. In other words, it can take the regular tax thing. And, just as sort of an advanced strategy, what I generally do, and this is advanced and it's not really an entity, but a lot of times I recommend to my clients that they use a trust. For their sub 2 deals.
I love land trust.
Yep. Then they can make the beneficiary of that trust, the beneficial interest, can be owned by their LLC, or it can be owned by them as individuals.
Right.
If that makes sense.
Oh yeah. I tell you, I tell all of my students, to use a land trust. Now, some don't like it because they don't understand it. Some live in states where it's, I think Arizona is a really bad state with regard to land trusts. They have a lot of problems, a lot of issues with them. But
and you know what? That's a whole nother topic. We might want to chat about that one day, because if you ever hear anyone say, "Oh, you can't use a land trust in such and such a state, they're illegal," you better find another attorney or accountant, because they don't know how to use trusts.
Oh, yes, it's not a matter. And these are just a couple of investors that are players that I trust, their opinions. And I've never bought a house in Arizona, so I don't know, but they just say it's so is so difficult to get a title company. That's the problem they're
Yep.
running.
And you know what? The problem isn't necessarily with the trust. It's with the fact that the title companies don't know how to use them.
Oh, I believe that.
They don't know how to use them. But anyway, that's what I would say as the entity structure. I always, I am not a big fan of buying properties in my own name as an investor.
Oh, no.
So I want to use some type of entity. And, the LLC, quite frankly, is one of the best entities that I know of. I don't go so far as being one of those guys who says, oh, yeah, you got to have a separate LLC for every single entity and you got to own the property in the LLC. Well, for rentals and buy and holds, I do. Okay. But if I were going to be selling subject to and stuff like that, I'd use one LLC. If I were going the LLC route, I would use one LLC and run it through that LLC and hold the note in the name of that LLC if I did the owner financing, right? And I wouldn't care how many properties it was. I'd hold all the notes through the same one. That's just me. That's my personal opinion, right? And then I would use that LLC in conjunction with trusts.
So you don't go along with, let's say, for example, let's say that you're a buy and hold for rental, that sort of guy. What I've always told people that ask, as far as asset protection, to have a dollar amount with regard to equity that they're comfortable with.
Yep.
And because they're like, how many LLCs do I need? I say, well, let's just say 100,000 is your threshold of security. So once you've got 2, 3, 4 properties and you've accumulated that much equity, it's time to form a new LLC.
Okay.
Is that?
And you're talking buy and holds?
Yes.
I totally agree. I'm the same way. I am not a one LLC, one property guy. And that's what I meant by that. And you've heard me say this before. I'll measure my level of a risk.
Sure.
Okay. And you know what? If the property is mortgaged to the hilt, you don't have to worry about it because it's not, it's not subject liability anyway. So we are talking about equity. Okay. We're talking about the amount of equity we want to.
Right.
And if it is 500,000, then once I reach the 500,000, I'd get another LLC. We're on the same page with that one. Okay, but still, you have to worry about it with the LLC. I still will use my LLCs in conjunction with a trust, but what a lot of people don't realize is a trust does not provide any asset protection in a trust. A trust provides asset hiding, right? And if people can't find them, they're protected in that manner. But if they ever did find out where the properties were, the asset protection in and of itself does not provide the trust itself does not provide asset protection.
Yeah, I hear that a lot too. They use asset protection in conjunction with talking about a trust.
Yep.
But privacy and anonymity in itself is just a tool. It's just like a layer,
Right. Oh, it absolutely is. And from that respect, and that's why I say it provides asset hiding, right? Because it's very, very difficult to find the owner of that asset if it's in a trust. And sometimes that's just as good. Right. So from that standpoint, I guess it does give a layer of protection, but in and of itself, when we talk about pure asset protection, meaning that the asset cannot be touched, that's not true if it's just in a trust.
That's right. But we could do a whole episode on land trust.
Yes, we could. We probably should.
But back to the entity structure and
yes,
talking about, you recommend an LLC. A lot of new investors ask me, they say, listen, we were told by this company that we need to form a Nevada corporation, and that's the best thing to do. A foreign corporation, and we operate in this state and do this and that. Is that true? I mean, okay. I never did it, but
Nevada is good. Okay. Nevada is good. I don't think it's the best. Believe it or not, these days, the best state for almost any of the different types of entities is Wyoming.
Okay.
Okay. And some of the advantages, we'll just talk about Nevada and Wyoming together. In Wyoming, right, there is no corporate income tax.
Well,
And
that's
what a lot
great.
of people don't think about, we all think of federal. We all think of federal stuff and what the federal tax rates are going to be, right? What people don't realize is that an LLC, even though it's kind of disregarded and it can have any type of tax entity, that's usually talking about from a federal standpoint. Most states still require LLCs to pay state taxes. Okay. And they're separate from the federal taxes. Well, Wyoming doesn't have any state tax. So you don't have to worry about filing an extra return in the state of Wyoming. Nevada does. Okay. So you have to be concerned with that. Some places in some states, they require that the LLC members, the original members, be listed publicly. In other words, if somebody does a online search for such and such an LLC in Tennessee, right, it lists the names of the people who formed the LLC. Okay, Nevada does require that. Wyoming does not. Now, the way you get around it in Nevada is you have a registered agent who lists, but it still has to be listed. Wyoming doesn't require
Right.
that listing, and there are a lot of other different types of advantages in the state of Wyoming. Wyoming doesn't share info with the Internal Revenue Service. Nevada doesn't. So there's some similarities between the two. But anybody who's getting ready to decide where they want their LLC, and if they're not going to use it in their own home state, then I would advise them to check out Wyoming, because there are some advantages over Nevada. But you'd have to compare, right? You have to
Yeah.
compare them and see which one works for yourself. Okay.
But let me ask, if let's say I live in Tennessee
Mm-hmm.
and I decide that either Nevada or Wyoming, I want to incorporate, or I want my entity there.
Uh-huh.
Don't I have to register that in my state anyway?
It depends on how you set it up. If you're
Yeah.
going to use it to hold property, you absolutely do.
Right.
If you're just going to have it as a pass-through entity and it's not really going to have a formal place of business in Tennessee, you really would not have to. Okay.
Okay.
So I think, yeah, I'm not one of those big folks of saying, oh, yeah, I'm going to have a Wyoming LLC. If I were just getting started, right, and I was going to have an LLC, I'd probably have it in my home state.
Yeah.
Quite
That would
honestly,
certainly.
I just think it's a big hassle to try to worry about getting a registered agent and doing all
Mhm.
this other stuff. Now, if I was making millions of dollars, okay,
Right. I hear you.
I'm talking about if I were just getting started, I don't think I'd worry about whether I needed a Wyoming LLC or not. If I had substantial assets and I had substantial income and I'd been doing this a long time and I were investing in other states, and if I'd been doing it for like 30 years or something like that, then I might worry about looking at a Wyoming LLC. And
Yeah,
it would be like my holding company that had all these little bitty LLCs and land trusts and stuff like that underneath it.
but that's certainly not, as a new investor, something,
No,
or even somebody maybe that's been in it for a year or two, not something
absolutely not.
really, that's a long term.
Oh my gosh, William,
Yeah.
one of these things, like the little gal who couldn't decide what to name her LLC, could you imagine what predicament she would have been in if she had tried to decide between Nevada and Wyoming as to where she wanted to put it?
Yeah, you really blow her mind, send her to like a Pete Fortunato class or something. Yeah.
It's
That would,
crazy. But no,
yeah,
I would, if I were going to do that, I would look at Wyoming, not Nevada.
right.
And if I were going to do that, I would have been a long-term investor and had substantial assets that I thought needed protecting, because I look at those types of structures more as wealth building, wealth protection, and estate planning type situations.
Right. Okay. So really what you recommend is use of an LLC with the proper designation, and then using a land trust as an added layer.
Yep,
Uh,
that's what I do.
and that's really about as complicated as it gets.
Yeah, you don't want it too complicated.
Exactly.
You
Yeah.
don't want it too complicated.
You don't have to have one of these great big charts on the wall with all these arrows pointing to partnerships and LLCs and corporations and holding companies, and at least not
Not
until,
until you have done some deals.
yeah, until you've made your million and now you're looking to to really have a fortress
Sure.
to protect everything.
But that's just me.
Yeah. Oh, listen, I totally agree. I say day after day after day, keep it simple, everything. You see me say that all the time. Keep it
Yep.
simple, fewer moving parts, less to break, fewer problems. That's really the way to go.
I totally agree.
When you're new and you're getting started, you need to focus on learning how to make deals happen and make money.
Absolutely.
And have some money first before you worry about protecting it.
Well, that's exactly right. And that's a point I was making the other day on one of the forums. Somebody says, what type of asset protection should I be looking at? And I said, the first question I would ask you is, do you have any assets to protect? Because if you don't need to be worrying about asset protection before you worry about deal structure.
The Sub2 Deals Show with your host, Sub2 expert William Tingle. We'll be right back. Hey Sub2ers, do you want to learn how to get the deed but need a little help getting started? Want to learn how to fill out the paperwork, how to use a land trust, how to market for deals, how to negotiate with sellers, and more? Join us in the Sub2 Deals Facebook coaching group. Get the benefits of one-on-one coaching without the big price tag. Learn to do Sub2 right with coaching in a group setting and mastermind format. Head over to sub2deals.com right now and click on consulting and group coaching. We'll save you a seat. Back to the show, the Sub2 Deals Show with your host, Sub2 expert William Tingle.
Now, on these entities, can you form them yourself, or do you need to use a service like, I don't know, LegalZoom or something? Is there an advantage to using a service or an attorney?
All right. I don't think so, quite honestly, because they are so easy to form. Generally, all you have to do is go online to the Secretary of State's office, whatever state that you want to form your LLC, and get it set up. It's just a few questions that they ask. One of the biggest ones being, is it a member managed or a manager managed LLC? Those types of questions that they ask. The biggest problem that I see with someone setting it up themselves, they think that once it's registered and they paid their $120 or their $90 or their $800 in California or whatever amount it is, they think they're done. I have my LLC and I have my name and I'm registered. And then they never do anything else. Okay. That's the biggest mistake I see people making. And that's why I say personally that most LLCs aren't worth a darn, and they are not doing what they should be doing for investors. They need to look at an operating agreement. There needs to be an operating agreement. And I know that some states say, oh, you don't need a written operating agreement. I totally disagree. I think every single LLC should have an operating agreement. Because, William, I know you've been around long enough to hear about piercing the corporate veil and all this kind of stuff, right?
Yeah.
Okay. What they don't talk about is piercing that veil with LLCs.
Mm-hmm.
Okay. Because an LLC is supposed to provide asset protection. It's supposed to be separate from you and your assets. That's one of the advantages of having an LLC. Well, if you don't set it up right, a court will just say, oh, okay, this is not a true business. You are the LLC, and that puts all your personal assets together. And one of the things that they use to do that is the fact that you're not treating your LLC like a business. Well, how do you treat it as a business? Well, one thing is to have an operating statement agreement, right? Another thing is to have annual meetings with the shareholders or the members. And that member may be you, and you just type up a document that says, we had our annual meeting and this is what we discussed. These are the procedures that we put into place. Right? It's like you have a meeting with yourself. And I've heard so many people say that, oh, having an LLC, one of the advantages is you don't have to have all those meetings like you do with a corporation. That's true. Mm-hmm. Okay. But I think you're an idiot if you don't, because that's what sets you apart from the personal and the business. And if IRS ever wanted to say, oh, okay, you are this business and we're going to tax everything to you at your personal rates and all this kind of stuff, you say, nope, here it is. This is how I treat it, and this is how I show that it's separate. If you're ever taken to court and they try to get a judgment against your personal assets for something that happened in your LLC, you can say, oh, no, 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 I'm just a member of that LLC. My personal assets are not at risk. And this is what kind of proves it. I treat it as a separate business.
Right. I know whenever I need a new LLC or form a new entity, I take a brand new 2-inch 3-ring binder, and the label goes on it, and every piece of paper that I produce with it gets punched and put in that binder, and
Yep.
that's it. And
That's
then it's all together.
That's exactly how it ought to be. And that's what LegalZoom and places like that, they don't provide that, but they're not supposed to.
Right.
All they're supposed to do is say, we will get you set up. Right. An attorney, I would say, is second best for the simple reason a lot of them don't know how to set it up for investors. Okay. They know how to set them up, but they don't follow up with the operating agreement that's designed specifically for real estate people and stuff like that. Right.
Yeah.
But it's better than not having anything. Okay. And then the other is, I think the best is, if you're going to use an attorney, find one that understands real estate and as a real estate attorney, something like that, and have them help you set it up. But the key is to follow up and produce the documentation that will show that you are a legal entity and that you're operating as one.
Do you happen to teach a class or offer something on entity structure and how to set those
I
up?
actually have events on entity structure. I have a few events every year.
Mm-hmm.
And usually when I do, it depends on which event it is. A lot of times the topic's set by my mastermind folks that come to the events, and that's what we'll talk about. But yeah, I go over entity structure. And that's one of the things that I offer my clients is entity structure.
Right.
And that's totally separate from real estate. A lot of people don't even know that I do that. But if, let's say that a client has an LLC already set up, right? Because I don't set them up for them. I expect them to set up their own LLC, but then I'll help them with drafting with the operating agreement and having the meetings during the year and what forms they have to have for that and stuff like that. Yeah.
Right. Okay. Well, so what I hear you saying is, for the new investor, and that's really what this episode is targeting, is taxes and entity structure for real estate investors, with a focus on new people, because they seem to have the most trouble in how to get started and how to get things set up and what they need to do. So what I hear you saying, Bill, is get started investing. You don't have to have an LLC or a corporation or a foreign corporation to buy a house. Just get out there and do something. When you are ready to form one, start with an LLC. There are a lot of choices with it. You can do a lot of different stuff with it, and it's the best in your opinion.
Yep.
And educate yourself enough to know when it's time to form an entity, how to do it yourself. It's not that difficult. You'll save a lot of money. And you can also take the time to learn about the meetings that need to be held and the proper paperwork that needs to be done, and how to keep your LLC valid. So if you're challenged, you won't get hurt.
Correct. Absolutely. And the other thing, one other point I would make is if you're not planning on doing your taxes yourself, and I don't think you should,
right?
Okay, after you've done a few deals, you probably need to go ahead and start looking for a good real estate accountant, not attorney, but a tax guy or gal who knows real estate, because they will save you thousands, okay, in that. And you don't want to wait until after a year is over, right? Because once December 31st hits, guys, it's history. Right.
Yep.
There's no way you can go back and take and make any more deductions. Now, you can get an accountant to go back and see what you did and unravel all of that and say, oh yeah, you did these deductions and stuff like that. But it is what it is, right? And if you didn't, pay enough in on taxes, or if you did not spend enough on proper deductions, you're stuck with that. You can't go back and change it. Okay. If you talk to somebody during your tax year, they can kind of help you do some tax planning. And if you've done a few deals and haven't made any type of structure, Okay, IRS already has one for you, and it's called a sole proprietorship.
Yeah,
Okay,
you don't want that.
and you don't want that, because especially if you're a wholesaler and doing flipping, okay, because as I mentioned before, that's active income, and not only will you pay regular income taxes, but you will pay 15.3% self-employment tax, and that can be avoided if you talk to someone and do some tax planning. So don't wait around. After a few deals, you need to go ahead and start looking at somebody that will help you structure that stuff properly.
Yeah, I know I can't, yeah. The first year that I started investing late in the year, and bought my first, like I said, 4 properties, and walked into H&R Block, one of their little kiosks, with my folders for my houses I'd bought, and sat them down on the desk, and the girl's like, what? you know,
They probably had no idea what to do with that stuff.
had no idea, and I didn't have much of any idea either, except that I'd bought these houses and sold them on lease options, and hey, I needed somebody to do a tax miracle for me. But you live and learn, and that was how it went for me. Don't do that. But I can tell you that when you have someone to work with, and not every accountant out there or CPA is going to be your person.
Oh,
Okay?
absolutely not.
Listen,
Absolutely not.
after my lesson with H&R Block, I started going from person to person, and I'm telling you, a lot of them don't have a clue. But when you find that person, and you're working with them throughout the year, and they give you that email late in the year that says, hey, you need to go spend some money, that's a great email.
Absolutely is. Absolutely is. Somebody, I always say, people say, oh, I don't like paying at this high tax rate. I don't like paying this high tax rate. I don't want to be in this bracket. And I just say, you know what? The higher the bracket, the better the view.
That's right.
Okay.
That's true.
Because even though you may be in a high bracket, it doesn't necessarily mean that you're going to be paying high taxes if you've got a good accountant. And it doesn't have to be a CPA.
Yeah.
Perish the thought. I was one. So I can say that. Does not have to be a CPA. There are a lot of very good EAs. Those are enrolled agents who actually worked for Internal Revenue Service. Okay. And now they have gone out and they've started their own accounting practices and stuff like that. So they're EAs, enrolled agents. They know a lot about taxes.
Mhm.
There are some just basic accountants that know a lot about taxes. So you have to talk to a lot of different people. You would think that every CPA out there knows how to structure tax returns for real estate investors. They do not. Okay, so like you said, William, you've got to find somebody that works with you. First, you got to make sure they understand real estate. The next thing you got to do is kind of talk to them, and I've alluded to this before, you got to kind of talk to them about risk tolerance. How much risk are you willing to take, on your tax return? Right? Because like I said, I had to get rid of some clients. I had to send them over to my partner, because my partner, we kind of balanced each other out, right? He was not nearly as an aggressive tax preparer as I was, because I was one of those guys who would bend that rule until it almost broke, right?
Right.
He was one that, hey, I'll take it if the code says I can, and he might go a little bit further than that, but not much. And some of those clients that I sent over to him, and I said, hey, you know what? I think you'd be more comfortable with my partner. And the reason I said that is I knew they would drive me crazy, because I would see all these deductions that they could take that would save them hundreds and even thousands of dollars in taxes, and they wouldn't take them.
Yeah.
Okay, because they thought it was too risky.
Yeah.
Okay. And it would drive me crazy. And then I would drive them crazy by saying, oh, you need to do this. You need to do this. You need to do this. And sometimes say, you're an idiot if you don't don't do this. Right. So you kind of have to find a tax preparer that you resonate with. Right.
Right.
And that is going to be good for you. Just like a coach. Right. You got to
Yeah.
find somebody you're comfortable with and that you resonate with.
That's right.
And that's really, really important. And sometimes that's one of the most important things. Find somebody you can work with on your taxes.
Right. I know, Bill, you said earlier that you still did tax work for people. Are you still taking clients?
I do the tax structure. the
Okay.
entity structure
I
type
got you.
stuff. I don't prepare returns. No,
I
no,
got
no,
you.
no. That was one of the things that I was really happy to walk away
Right.
from. All right. But what I do is, help somebody decide what type of entity they need for the strategies that they're going to employ. I
Right.
help them decide where to start their entity up. I help them decide what types of deductions they need to take. I help them decide whether something is a good deduction or not a good deduction.
Right.
One of the things I might do is structure an installment sale and figure out, do you want to defer it or do you actually want to take all the gain now? That
Mhm.
type of thing. But then I send them along their merry way to have somebody else do their accounting and or their bookkeeping and actually putting the numbers on the return.
But you
But I have some
probably,
people that I can refer to.
oh
Yeah.
yeah. So you actually have people you could refer them to.
Oh
That
yeah, I have a couple of really really good people that I have absolute confidence in
Okay.
that I refer.
Well, great. Well, man, this was some excellent tax and entity structure information. I'll tell you, I managed to stay awake for it. That's a plus because man, it's a necessary evil, and that's about what it is for me. Now, people like you love it, but I'm telling you, man, I'm looking for the deal. This stuff right here puts me to sleep.
Right. And you know what? I understand.
But Bill, tell us again for the people listening how they can get in touch with you if they want to learn more about this or attend some of your events that teach it.
Sure, they can reach me by email at bill@billwalston.com. And I'm easy to find on Facebook. All you have to do is
Okay.
send me an instant message, and I get a lot of people who do that. They say it's so much easier than an email. It probably is, right? I'm easy to find there, and all they have to do is reach out there, either
Okay.
through the email or Facebook.
Okay, great. We're going to drop Bill's email in the show notes for you so you can reach him. And like he said, he's easy to find on Facebook. So there you have it. Well, basically what Bill's saying here is just get started. Don't worry about your entities. Buy a few houses. If you don't have any assets to protect, don't worry about it right now. After you've made a couple of deals and you see real estate's good for you, look at forming LLC. It's the easiest entity to form, and you can take several different elections and how you want to be taxed and that sort of thing. And don't worry about a foreign corporation. It's not absolutely necessary, and it's really more of a long-term sort of tax strategy. And again, look into some training either Bill offers or some other courses on how to form entities yourself, and also take the time to learn how to keep those things up to date. So if they're ever challenged, your assets are protected. I want to thank you guys for listening to this episode today, and get out there and buy some houses.
Thanks so much for listening to this episode of the Sub2 Deal Show with William Tingle. If you enjoyed today's episode, please leave a review and subscribe. And for more great content and to stay up to date, visit sub2deals.com, on Facebook at Sub2 Deals. We'll catch you next time.